joining me on this edition of Markets Tomorrow. We've got powerful voices, Rajat Rajgadia, Vector Research with Motilal Oswal Securities. We've got Sandeep Wagle, Managing Director and founder of Apita Technical Advisors, and then Tahir Badshah, Senior Vice President, Co-Head Equities with Motilal Oswal Asset Management. I'll kickstart the discussion with Tahir. Tahir, good evening and thank you for joining us. Tomorrow morning when we will wake up, I guess Indian markets will react to all the political opinion and all the political hum and drum.
Yeah, I think that's an event which the market has been waiting for quite some time. So clearly, I mean, there will be a response to the exit polls and whatever comes out of it over the next couple of days and especially even tomorrow. So I think that clearly will remain the important event which will guide the markets in the next couple of days. But hard to say if either which way based on the outcome, and it's obviously difficult to outguess the outcome of this election. But beyond a point, it will be difficult for the markets to just take politics into consideration. One will have to probably also focus on economics. So we have to remember that markets are not unlike in, let's say, 2009. If one were to draw a parallel, we are not at 9-10 times earnings in terms of multiples for the market. We are more like 14-15x. So obviously it is an important trigger. It's an important event for India for the next few years. But it can't really be looked at in isolation, given that we are not that cheap and there are other burning issues which are still to be addressed. And moreover, I don't know if it will be very easy for the market to just entirely extrapolate this into May 2014 either. So while be it whatever the outcome may turn out to be. So market will even after the next couple of days probably revert back to some of the other ground realities.
Sandeep, Nifty once again has failed to stay above 6,200. Yesterday it reversed and today it cracked.
Nikunj, yes, absolutely. I think the pre-event views have caught up and I think we will go down to 6,100. I see a 60-70 point downside. Nothing more than that. I won't talk of a 5,900 or so. 6,100, 60-80 should see some support coming in. But for sure we will be volatile with sharp moves. On the upside we may even test 62, 6230 depending on the outcome of the result. But 6,100 on the downside, 6230 on the upside, this is the range I see.
Let me also bring on board Rajat Rajgadia. Of course, Rajat represents the sell side of Motilal Oswal Securities, so there is no connection and no correlation in what you will hear from Tahir and what you will hear from Rajat. Rajat, at a time when the upside in the market is looking slightly restricted and is well defined, how should one invest in this kind of a market where mid-cap stocks have regained momentum and the polarized nature of the market is changing? Is it now really time to look outside those 15-20 halo stocks, and is it now time to really treasure hunt outside the Nifty 50?
Well, that's true because that has been the trend for the last 3 months. And last time when we spoke, we did articulated that the quarterly numbers that came were indicating that things have bottomed out. So you have two important data points. First is that the Q2 GDP number was 40 basis points more than Q1. And second, the corporate earnings growth was about 8% versus the decline of 3%. When you put these two overall things in context, then suddenly many stocks which are recovering from the lows of their business cycles will start doing well. And most of the money is made whenever stocks move from a very negative sentiment to a neutral sentiment, because I don't think we have any case right now to make for a positive sentiment. But yes, many of the businesses are either at their bottom or have seen their bottom a quarter back, and they are the stocks that one has to focus upon now.
Tahir, so what's your portfolio strategy at the current juncture? Are you now looking at revisiting cyclicals? Have you already bought beta and cyclicals in your portfolios?
So we've actually been positioned out there, not just for the impending recovery or not with that kind of a perspective, but simply because on a bottom-up basis we find value and we find some of these names which we own to have the right kind of business models to be able to to have delivered not just in the more challenging past, but probably in the event of a important and a better future as well. So given that, it's I wouldn't say that we've undergone any change in portfolio stance. We've never looked at our portfolio from the perspective of it being overall defensive or aggressive or high beta or low beta. Essentially, it's been a bottom-up kind of strategy. I think we will stick to that. But yes, there are many companies which are now looking much more investable than probably they were earlier, or they are especially in the mid-sized space. There are now many companies which the markets are willing to revalue based on their past history, their current recent performance, and their expected performance based on the quality and quality of their earnings growth and the longevity of their earnings growth. So we are looking for those kind of businesses which can perform over the longer term.
I think that's the standard template, that look for companies which are cheap and which offer good visibility in the medium term and the short term. Let's be specific here. What are your last purchases? Where are you allocating disproportionate amount of money? Where are you confident of a 15-20% return?
Like for example, so in most of the companies that we own in the portfolio, it's not about valuations at all. Nor are we looking for something which is cheap. We are basically looking for companies which can sustain the number that you mentioned, that 15-20% growth, and more sustainably at that. So while I'll be a little constrained to give you exact names, but I can clearly tell you that there are sectors such as in case of manufactured exports, there are which probably you could classify as cyclical or non-cyclical or high beta. There are opportunities in pharma. There are some opportunities even in the IT sector, which we believe are interesting. And we believe that we found a few good opportunities out there. We feel there are good opportunities even in the logistics space, which could benefit, and also in some of the retail names which are more quasi-consumer kind of companies. So these are the sectors which we are probably focusing on, and of course, last but not the least, even in non-banking financial services.
Right. So a whole host of sectors there from Tahir. Sandeep Waglia, let's be specific here. Autos. Today, auto stocks are down for the third day on the trot now. Do you think, at least for the short term, has auto lost momentum?
Yes, Nikunj, I would think so. Tata Motors is showing some kind of a corrective pattern, so is a Maruti. So I would say some more downside to the tune of 3 to 4%. I would be a buyer at those levels because I don't expect the markets to crack down below 60, 70, 80 points. So small downside, yes.
Rajat, the entire PSU banking space is still considered as an ugly duckling by many money managers. No one is convinced about the asset quality. Just about everyone is convinced that poor management is here to stay. But given the kind of hammering some of these PSU stocks have seen or experienced in last 12 months, is it time now to revisit the beaten down asset class called PSU banks?
Well, I think the most important trend that has happened in the PSU banks is that from a very consensus and negative commentary that came from the managements after the March quarter and the June quarter, September quarter was a mixed commentary trend. You had names like PNB which says that they have seen the worst on the asset quality. You had Bank of Baroda which has anyways been guiding well. Some of the other banks have seen stability in their NPL ratio, right? When stocks are at 0.5 times book, they will never have 100% visibility of things picking up. But if the broader view is that we have seen the bottoming out of the economy, I think there will be a triple positive impact on the banks. First, as the slippages come down, you will see the top line growing up. Second, the recoveries will flow in the other income. And third, you will see provisioning numbers coming down. 0.5 book, one-time book, it's all a function of the cycle for these banks. I know that we are at the bottom of the valuation cycle. We have seen the bottom of the business cycle. So the upsides in many of these names will be good. Important to find out are the PSU names where capital raisings will not be high, because if there is any bank bank which is diluting it by 30-40% to be well capitalized, as a minority investor, your return in that stock could be very limited. So it is better to stick with names which are well capitalized right now, primarily being names like PNB, SBI, or names like OBC.
Sandeep Bagle, what I want to discuss with you is Adani Power. If I have to nail it down to one stock which made all the difference to a trading portfolio, that was Adani Power.
Absolutely, Nikunj. I would be a buyer in this stock. In fact, we had a buy call in the first half of the day. It is closed almost at the high point. I'm not covering this stock in this show because I believe that the Nifty can come down by 50-60 points, but at lower levels, I don't see this stock go below 38. And on the upside, this can scale all the way to 43, 44. So take a positional view and buy it with a 10 to 15% upside, trading upside that can extend to even 20% or so over the next few weeks or so. I would definitely take a call in this stock.
Sandeep Bagle, in the overall scheme of things, what is the importance of 6150? Because we've gone below 6200, now another 20 points down, we go below 6150.
I don't think really 6150 is of any importance. I think for me the next target is 6100, 6080 once below 6200. So in that sense, I don't have a clear call as to what is the level that you are talking about. I think 6100, good chance that we may test it in terms of the volatility that we are expecting tomorrow. But I don't expect that to be broken, Nikunj. I think support will come in. You'll have a lot of choppiness, as I said earlier, 6100 to 62, 20, 30, wild swings in that range, and then depends on the news that comes in.
Tire macros have improved and stock prices have recovered about 15-20% from the recent low. The upturn has not started, but the downturn clearly is over. So how should an investor judge or gauge that how much of the good news is already in the price or how much of the good news is still not in the price?
Well, I think it's a tough call, and it depends on what's your outlook in terms of growth, and especially for those companies in the let's say those which are investment cycle sensitive or interest rate sensitive companies, and especially those which have risen nearly about 25 to 30% in the last 3 months' time. They've now started to look trifle expensive if you were to just do basic numbers on let's say even FY15 earnings. But do they have anything exciting in their business model which probably gives them visibility beyond FY15, even on a moderate growth scenario of the economy, is what you have to actually judge, because some of them have clearly become a little more expensive, and unless you have a better insight on the earnings of these companies compared to the market over the next 2 years, you will find it difficult to justify. So therefore the starting point will have to be that, and therefore also, like as I said earlier, you will have to depend a lot on, you'll have to narrow down your universe even within this set to companies which have delivered in the past, or where you have seen certain changes to their business models undertaken consciously by the companies, maybe to diversify into export markets, or perhaps to develop certain products which fill certain product gaps in their overall business, which now allows them to probably be a little more confident about the future, notwithstanding whatever happens to the domestic economy. So those are the kind of companies that you will have to first deal with in the initial lot. Once you get a little more convinced about the cycle turning far more strongly and maybe supported by political factors and perhaps economic factors, you can then go down the curve on these companies. But otherwise, at this level, you'll have to restrict yourself to the first lot of better quality companies in this space.
Okay, talk about recovery or rally. Well, Tata Steel is up more than 200 rupees from the recent low. It was languishing closer to 220, 230, and it's honestly been a one-way street for Tata Steel. Rajat, what is the story with Tata Steel? Is Tata Steel a beaten down cyclical which is making a comeback, or a company which will be a big beneficiary of import substitution trade?
Well, I think there are two things which are working in favor of Tata Steel. First is if you look at the every data point that is coming out of Europe and China over the last 3-4 months, things have only been trending up. And this is a stock which is surely a combination of both how Europe and China is doing. And secondly, wherever you see even a little bit of improvement at the operating level happening for them, given the massive leverage that is there on the balance sheet or in the P&L account, right? Any improvement in the EBITDA leads to a reasonable good improvement at the profit level. But we would believe that Tata Steel is one stock which is a lot more to do with excitement, because our numbers still don't suggest that we are going to see any meaningful improvement, because as far as Chorus is concerned, we are still going to see numbers remaining quite low. And on the domestic front, the prices have trended up little bit, but I guess that the volumes are still not doing. The stock from again that same theory that you mentioned earlier, from an awful to a less awful stage, from a 200 rupees to a 400 rupees was a big cyclical move. But right now, we would definitely be cautious on this name.
Navneet Saluja is standing by to tell us which are some of the important stocks for tomorrow.
Well, Nikunj, first up, watch out for Hero MotoCorp, where the dealers are suggesting to go long on this particular counter. The short-term triggers for the stock has been a kind of margin expansion which we've seen, and also the increase in market share. Well, if you look at the November sales number, they came in at about 5.3 lakh units. The demand from the northern market has been looking really strong, and well, the company did take some kind of price hike in order to offset the cost, and the estimate for FY15 EPS is around 140 rupees. The other counter is Reliance Infra, which according to dealers, they suggest going short on this counter, and the trigger for this particular stock has been the outcome of the Delhi election result. According to them, if BJP or Aam Aadmi Party comes into the power, the company may have to cut down on its electricity tariff, on back of which that's a short call coming from the dealing room on Reliance Infra.
Thanks a lot for that. Sandeep Wagli, how should one trade tomorrow? What are your top ideas for tomorrow morning?
Nikunj, sell in Hind Unilever, stop loss of 584, target of 560. This stock has been weak and should see some downside in the days to come. I think we talked of Adani Power earlier, a buy in Adani Power, stop loss of 37, target of 44.
Tahir, I know you can't talk stocks, you've given me a flavor of sectors you like, but give me a theme or business where you've just, you've allocated disproportionate amount of money.
So to be honest with you, we've not really done anything where we've allocated disproportionately. What we've only done is incremental addition to some of the names that we continue to like. We own as of now. They are part of our existing portfolio. But probably they have, we believe that either they have underperformed or probably we see further upside to those companies. So we have added to those names. And they cut across both let's say the cyclicals and the non-cyclical space, if you were to like.
Well, gentlemen, appreciate your time. Thank you for joining us. It's time out on this edition of Markets Tomorrow.